Thank you so much, Erin, and hi, everyone. Thanks for joining us for this timely discussion on crypto markets and the involvement of institutions. As Erin said, I'm Noelle Atchison, Managing Director of Research here at CoinDesk, and over the next 30 minutes, we're going to look at the role institutions are playing in recent market evolution, how the market is changing, and, of course, some of the recent developments over the past couple of weeks and the past couple of days that shed light on where it could go from here. To do that, I'm joined by two people that you probably already know. For those of you just tuning in, I'm joined by the CEO of MicroStrategy, Michael Saylor, who arguably kicked off a wave of corporate interest in Bitcoin reserves and who many of you know for the educational work he's done in bringing institutions and corporations into our industry. And I'm also joined by Michael Sonnenschein, CEO of Grayscale Investments, the largest and longest running digital asset manager in the industry and a sister company of CoinDesk. Thank you both so much for being here.
Great to be here.
Now, normally I would be asking the events content team why we have two Michaels on this panel, as it's going to make directing the questions a bit more complicated than usual, and surely there should be rules about this kind of thing. But in this case, the question will be pointless because there are no two people better positioned to discuss the shape and characteristics of the institutional involvement in this stage of the market. So I'm going to take the cumbersome route of addressing each of you by your full name. It'll sound oddly formal, but we'll get used to it. Now, I know a lot of people watching want to hear more about the Bitcoin Mining Council that you announced yesterday, Michael Saylor, as do I. But before we dive into that, let's set up some market context. Let's talk about the market drama of the past couple of weeks before we dive into some of the more recent developments and then move on to broader market issues that institutions are interested in and concerned about. And as if we needed a reminder that crypto markets are never boring and things move fast, we saw some wild swings over the past couple of weeks that at one stage had Bitcoin down 50% from its recent high. And even just over this weekend, the price was down about 20% on the day. Michael Saylor, MicroStrategy has been buying the recent dip, so we can infer your view on whether this was or not a short-term blip. But from what you're hearing, did it have any impact on corporate interest in Bitcoin? Things got pretty hairy there for a while.
Yeah, I think that Bitcoin's one of those stories where if you're only casually interested in it, you just look at the price volatility and the deeper you look at it, the more you think it's like a generational or a decade-long trade. Last week, I think there are pros and cons. Clearly, there's a bit more volatility, and that would scare away weak non-committal players. But there's a ton of institutions that were very enthusiastic about it that decided they wanted to buy it when it was 30,000 around the beginning of the year. And then they watched to their chagrin as it doubled, and they thought, well, it can't double every quarter forever. It's ahead of itself. And then they stopped and they wouldn't buy. And so in circumstances like that, what you want is a dip where they get to get in at a very good price. And so a lot of people think, oh, the price traded down last week. But if you actually look at the exchange volume on Binance, which is probably the most liquid, greatest statistical example we have, on Black Thursday in March of 2020, Binance, that exchange traded $2 billion in an awful day, the worst day of the year by most people's recollections. On the day when, and it was around 5,000. On the day when MicroStrategy announced our purchase, August 10th, that exchange traded $1 billion of Bitcoin in the day. I think that exchange has traded up to $14 or $15 billion of Bitcoin on some days last week and traded $60 billion over the course of 6 days. And it's the bottom line. Bitcoin's up by a factor of 4. Liquidity's up by a factor of 5 to 8, even 10. And some institutions bought $60 billion of Bitcoin at a good price last week while someone got panicked over what I view as FUD, and they dumped it too cheap. So, I think what you see is that the long-term players are actually pretty happy to have the opportunity to get into this entry point. And if I was looking at it, the number one thing I'd always look at is the price moving on no volume or in a lot of volume? Because that tells you the institutional sentiment.
That's a very good point, yes. And Michael Sonnenschein, the institutions that you speak to, many have been invested in crypto for a very long time. So this was nothing new, but many are new. We saw huge institutional inflow in Q4 and Q1. So this will be the first time they've been exposed to something like this. Did it spook them?
I don't think that it does. I think what we've historically seen is when there are these types of pullbacks, you typically see investors using them as really opportunities to either average down on their position, or in some instances to start a position. You know, having been in my seat over the last 8 years, I'm still yet to find somebody who's able to time the market, no matter how storied or experienced an investor you are. And I think generally the institutions that have been allocating to the space are those that are going to be in this trade for the medium to long term. And so I like to think about, well, if your fundamental reason for having this allocation hasn't changed, but suddenly you can buy the same asset for 10, 15, maybe even 20% less than you could the day before, then that for an institution is a really compelling opportunity. I think historically, one thing that has certainly resonated with institutions is really resiliency. Each time we see some of these very material pullbacks in price, we're seeing a pretty massive deleveraging of the entire ecosystem, which I think is healthy. And when you think about the fact that this may at times represent volatility that is larger or more pronounced than sometimes is viewed in equities or fixed income or other asset classes, it's almost a healthy reminder to a lot of investors of just how early it is for investing in the ecosystem, and that it is subject to these types of price swings. But by no means do I think that this discourages investment. I think more often than not, we hear investors use this opportunistically as they think about building portfolios that include crypto over a longer time horizon.
Yeah, that's a very interesting point about the time horizon of investment and would separate investors from traders. And as Michael Saylor hinted, many focus on the price, but longer term investors focus on a whole lot of other metrics, even more so perhaps than the price. And Michael Sonnenschein, sticking with you for a second, we've been hearing louder talk, at least from what I've seen, about Bitcoin's energy footprint. We see it splashed across mainstream media and gleefully retweeted and shared on social media. Is this concern about Bitcoin's environmental impact, is it shared across institutional investors?
So the institutions that we deal with are exceedingly well informed, not just about the fundamentals that underpin and govern the Bitcoin protocol, but also obviously mining, which is a key component of it. And so I don't think it's any secret that mining is an energy intensive process and something that is, very, very, very important to the effective functioning of the network. Now, what's been interesting is that as institutions have come into the space, and certainly ESG has been a theme that many of them have been wanting to, allocate towards and think about in terms of their investment approach, it suddenly, though, feels like more light is being shined on this one area of the ecosystem. And I actually view this more than anything as an opportunity. The ecosystem is new. The mining ecosystem has evolved very rapidly as the difficulty has changed over time. As one day you could use a store-bought computer to mine Bitcoin, today it's obviously evolved into a much, much different ecosystem and a very, very competitive landscape. And what we've certainly seen from our seat being plugged in to various miners in various parts of the ecosystem is that folks really are thinking about the environmental concerns and are using renewables as part of their energy mix. So I think as we, potentially shed more light on this and spend some more time on this to engage with miners in the ecosystem, it really is an opportunity for a very young asset class and a very young ecosystem to, I think, further embrace, other renewable energy sources and to make this a more material part of the impact they have.
I also like the point you make about how much the Bitcoin mining industry has changed over the past few years, not just through energy mix, but also geographically. Michael Saylor, what about corporations? Do you see genuine concern there about Bitcoin's environmental impact?
I think the corporations would have the same thoughts that any other institutional investor has. I think they just want to be educated on the subject. And that's the key for us, provide education.
And that provides a very good segue. See what I did there? We can now talk about the Bitcoin Mining Council, speaking of education on the energy footprint. You announced on Twitter yesterday, Michael Saylor, that you had convened many of North America's largest Bitcoin miners and Elon Musk to discuss the industry's environmental footprint and what can be done to improve the understanding and perception of the current status. Can you give us some background on how that came together?
Sure. Well, Elon is a big believer in crypto technology as a force for freedom, and he's a big believer in Bitcoin as a long-term store of value, and he's expressed that sentiment in a number of ways, including taking a multi-billion-dollar position in Bitcoin. I think we all know he expressed a concern that he didn't want to see Bitcoin be the catalyst to bring to life dirty fossil fuels. And that created a bit of a Twitter stir. And that caused Bitcoin to dominate the news cycle all last week across the mainstream media. And I think it became pretty clear that that we have the Bitcoiners, we have a good story, but it's a very complicated story. And we need to find a way to share our story and to educate and get organized. So I think my first thought was there's no point in us tweeting back and forth at each other, because I don't think 280 character Twitters are right ways to educate the public and build consensus. So I reached out to Elon and I spoke with him, and we had a very long conversation. And from that, I asked him if he had relationships or had met with the Bitcoin miners. And Elon has expressed, right, on the record, he said he thought we would all benefit if we were able to publish energy usage and source of energy usage data. It turns out that Bitcoin miners don't actually have a good forum for communicating how they generate their energy. We don't have a shared common model for Bitcoin energy usage right now, and we don't have a future forecast model that we commonly use. So we're allowing other journalists in the mainstream media, or just anybody that wants to make up their own model. The most famous one being the boil the oceans by 2020 model that's going to cause the planet to overheat by 2 centigrade and kill us all. But and that's still it's still ratcheting around, right? So we have some bad models, and I happen to have a fairly nuanced model. My view is that energy usage is, energy efficiency is growing exponentially. The S19 miners are increasing by a factor of 5 in energy efficiency versus the S9s, and between the halvings and the shift to transaction fees and the upgrade of the miners, we're going to see energy efficiency increase exponentially and energy usage decrease exponentially. I don't think there's any models or any understanding of how that's working. And it's a fairly complicated subject. I mean, it would take me about half an hour on your podcast here. I don't think we could talk about it. But what I can say is I had some detailed discussions, and I asked Elon if he had relationships with the miners, and he said he'd like to meet them. So I reached out to the miners, and I asked them if they'd like to meet Elon Musk, and they said yes, they would. And so we set up the meeting because he wanted to understand how they're mining and what their plans and futures are, and they wanted to understand his concerns, and we wanted to understand how we could be the good guys in the entire ESG debate, because I think that Bitcoin they are the good people. We are actually driving sustainability. It is a great way to recycle wasted energy, and we have a great energy story. And so I think that the group came together to get Elon's thoughts, and for us to brainstorm on what we can do in order to communicate constructively to the entire industry. and avoid reinventing the wheel, right? Because if there's 200 miners and each one of them has to develop their own model of the future of Bitcoin mining for the next 20 years and figure out what to say and who to say it to, and it gets pretty complicated, and none of them have a voice or a platform to get their message through. So I thought it was a very constructive meeting. I think we do have a great story. I think we're all committed to taking that message out to institutional investors and to refining it. And I think Elon's first order ask was, hey, can we come up with a way to publish or create transparency for Bitcoin mining energy usage? I saw something on Twitter today that suggested that Bitcoin is 2 or 3x as sustainable as other energy users. That's the kind of story we need to get out, but we need to legitimize it by having really good data. So I think the first step is let's come up with a protocol for us to publish energy information, and then a way that we can share it with the world, and then work together to make sure that we pursue sustainable energy goals, because that does, because it's true, A. B, because it will actually ensure that the mainstream news cycles are positive and not negative. And that will give institutional investors comfort as they enter the space and not cause them to pause.
Yeah, Michael, I wholeheartedly agree with you. Noel, if I could just jump in for a sec. I think, the past few weeks when we've had this kind of renewed focus on ESG concerns around Bitcoin or digital currency mining, I think for a lot of us in the space and a lot of the conversations we've been having with investors have really caused us to kind of go back to square one on Bitcoin and the idea of decentralized currencies. These were really brought about to create a better world, a more inclusive world, a more sustainable world. And so I think, having, some catalyst as of recent to have a renewed focus on the sustainability component is, again, an opportunity for the ecosystem, not necessarily a flaw. So we're not hearing from investors that this is, somehow become a deterrent, but rather, yet again, a reminder that if, in the last 10 or 12 years, that now that Bitcoin has, moved more into the mainstream, and these are now some of the kind of growing pains or kind of the next steps in its evolution for it to tackle, well, then that presents a really exciting way, to Michael's point, for the industry to work together to try to solve some of those.
And regaining control of the narrative with actual data. Right now, we've been hearing similar stories, but they've been very largely anecdotal. What is interesting to reflect on is, would we even be having this conversation a few years ago? In other words, is it the institutional involvement that is bringing some mainstream attention to the environmental concerns, especially given some of the pressing issues that investment funds around the world have to deal with? Michael Saylor, many have set off sirens claiming that this is industry centralization. It could lead to miner collusion, perhaps network censorship. What's your response to that?
Everybody in that meeting, including Elon, are passionate believers in decentralization. The only reason we had the meeting is because we wanted to ensure the success of a decentralized cryptocurrency, and the source of the decentralization is energy usage. And the existential threat to Bitcoin is concerns over the sustainability of the energy usage. So to the extent that we want to defend Bitcoin, we need to manage any concerns, especially from uninformed parties, concerning energy usage. We need to make sure that people that are hostile to Bitcoin and hostile to the crypto industry aren't defining those narratives and defining those models and defining those metrics. In the absence of any good information or any response on our part, they will define those models. I think there was this concern, there's some concerns, it's a secret meeting. If it's a secret meeting, I wouldn't have told millions of people the next day that it was a secret meeting. Trust me. We told everybody in the world that we had a meeting. And if everybody wants to know what happened in the meeting, what happened in the meeting is Elon met the miners. The miners talked about, their approach toward energy and their commitment to sustainability. We asked Elon for his advice about how we might actually manage concerns in the mainstream. We had a detailed conversation about it. We talked about how we might be able to surface better data, and it was very constructive. And then we agreed, to do our best to continue to work toward sustainability and similar goals.
Michael Sonnenschein, you've probably seen that many of the Bitcoin, advocates, original OGs, if you like, Bitcoin advocates, are very much against this idea because of the threat of centralization. The Bitcoin community has lived through a few scares like this in the past, which turned out not to be a big deal. What do you think it would take to convince the community that centralization is not a risk here?
I think we just need time more than anything, Noelle. I think time and again, we continue to see the ecosystem, Bitcoin or otherwise, continue to get challenged. And, each time there's a challenge, whether it's, things around block size, transactional throughput, ESG concerns. We've been through challenges around the use cases for Bitcoin. Is it used for nefarious activity? Is it not? How much transparency is there? We've seen so many iterations of this. And I think each time, and one of the things that's so rewarding about being part of this community is that each time it does get challenged, it comes out of those challenges stronger than ever. So I think, this is somewhat of, I believe, to be a short-lived focus on this aspect of the ecosystem. And again, given the kind of ingenuity and the human capital that's involved with Bitcoin today, I have the utmost confidence that, solutions are on the horizon.
Michael Saylor, what are the next steps for the council?
I think we're going to continue to work on this energy issue to see if we can come up with some way to report Bitcoin's energy usage and keep track of our progress towards sustainability and benchmark us versus other industries, so that we can come up with the right way to communicate this to the rest of the world, and the institutional community and the mainstream media. It's a completely energy-focused discussion, and primarily just completely focused upon how we create transparency toward the use of energy, and also, I think, build confidence in the rest of the world that Bitcoin is not getting dirtier and less energy efficient. Bitcoin is cleaner and more energy efficient, and in fact, it is the most efficient use of energy in the world right now. As I've said before, I think it's the most efficient technology for converting energy into prosperity.
As an analyst, I am very much looking forward to getting hold of a data-based narrative and talking more about facts rather than assumptions. So thank you for that. Michael Sonnenschein, let's zoom out in the few minutes that we have left. The description for this chat says that the institutional herd narrative is finally playing out as predicted. Is it? You've been in this market longer than most. Is this the institutional market you expected?
I think we're definitely moving into the market that we all hoped would one day come. I would say from our seat, we're encouraged by how much institutional participation has been involved in this ecosystem and continues to join. That's happening both, I think, in the money management space, so pensions, endowments, RIAs, hedge funds, but then also this whole new segment of corporates like Michael and MicroStrategy, and what he and other really notable and very experienced investors are doing as they think about allocating to Bitcoin. I think what feels different to us this time around is the dynamics at play in the market. So earlier we touched on liquidity, but I also want to talk about some of the other things that have come along, the trading tools, the tax lot reporting, the development of indices, the development of order management systems. I think the absence of these tools is what has historically prevented institutional adoption and participation. And the fact that they're now part of this ecosystem has certainly made it much more approachable and much more attainable for traditional investors and institutional investors to get involved. Where I think we're headed from here, though, is the fact that even though we have this great ecosystem of tools being built, it still hasn't been bridged into the traditional financial system. Some who are kind of crypto enthusiasts and OGs may argue that's a good thing, and we should keep crypto out of the traditional financial system. And others argue that the next billion or multi-billion people that will access crypto will be because those two systems get bridged. And so a lot of the things that we're focused on are looking at how these two ecosystems are going to be bridged, and what that's going to do to allow more users into the crypto ecosystem and how they're going to access crypto as part of their investment portfolio.
Michael Saylor, what has most surprised you about the changes? What's the biggest change in the market, in your opinion, since MicroStrategy bought its first Bitcoin?
What surprised me is that we've had a nonstop avalanche of good news. David Rubenstein, who's Jerome Powell's famous boss, endorses crypto. Larry Summers, the Secretary of the Treasury, endorses crypto. Goldman Sachs declares, they endorse Bitcoin, right? They're saying that this is a new asset class. Ray Dalio says he'd rather own Bitcoin than bonds, right? Coinbase comes public. An avalanche of really good news. And then I see the volatility in the market all based upon FUD. And the FUD is, first it was the Chinese are mining too much Bitcoin. And then the FUD was sell Bitcoin. And the second FUD was the Chinese are going to stop mining Bitcoin, sell Bitcoin. And then the FUD was, well, you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, oh, the Chinese reiterated you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, oh, IRS says you got to pay your taxes, sell Bitcoin. So, and that's the news cycle, right? So I feel like everything's working out great. I mean, if you'd asked me in August, do you expect to get the legitimization of Bitcoin like this? I wouldn't have in my wildest dreams expected so much good news to come. So I think it's going awesome. Just the market's volatile.
That is such a good upbeat note to end this session on. Thank you so much, Michael Saylor, Michael Sonnenschein. Given those changes we've seen just over the past few months, it is going to be certainly interesting to see what will have changed between now and Consensus 2022, apart from hopefully the fact that we might be able to be together in person. Thank you both so much for your time today. Thank you all for watching us, and I'm going to hand it back to Aaron now.
Thanks.
So Michael Saylor just said that the correction of Bitcoin is based on pure FUD. That was a great way to close that. Something really interesting that he said was that he organized this meeting between Elon Musk and the miners, and that he asked the miners if they wanted to go and talk to Elon Musk about settling the debate around energy consumption and how green Bitcoin's mining is. And they all apparently were interested in talking to each other. And he said that everybody in that meeting is a passionate fan of decentralization and of the value of Bitcoin in the world. That is great to hear. They spoke about how they can make the energy usage in Bitcoin mining more transparent. He highlighted that everything isn't transparent at the moment, but it does need to be. Obviously, we live in a day where ESG is becoming more and more important for investors. So highlighting all of those metrics in real, transparent, accessible figures that you can look at online before you make your purchasing decision is important. What he also said is that Bitcoin is getting cleaner every day. He said he predicted that Bitcoin is going to exponentially become more and more efficient as new miners are produced, as the new versions of AMP miners and all of the other miners that are used around the world are produced, and energy usage is equally at the same time going to come exponentially down. So when you mix those two together, he believes that everything happening right now is pure FUD with the price correction, that it should go back up. Obviously, we all know that it's all passionate FUD. Too many people are on Twitter, basically. Everyone is following the same person that has has around 2 million followers, and then he tweets something that he shouldn't be tweeting, probably at the wrong time of the day, and then the market corrects. He tweets the opposite side of the picture, and then the market goes up. So great to see Michael Saylor talking there. I hope you guys enjoyed that as much as I did. Make sure you hit the like button on this video and subscribe to this channel.